Okay, guys, Chris is here to take over the show. I appreciate you all taking time to spend with me today. I think I'm on later this week. It might be tomorrow or Friday, not sure. But guys, have a great one. I will see you all very soon. Don't get margin called. Have a good day.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Wednesday, happy NVIDIA day. We'll find out what happens after market. That's going to be the big news today. I mentioned this yesterday in my final hour YouTube session. NVIDIA means a lot to the market as it has grown, a ridiculous amount over the last 2 to 3 years. I said this yesterday. So NVIDIA is 19% of the weight of SMH, which is a monster weighting. NVIDIA is 7% weight of the SPY, and NVIDIA is 8% weight of the QQQ. So there is a lot riding on this particular earnings report. The trend continues to go higher. I think what's going to matter, it's going to be price action, whether it's a good earnings report, positive guidance, who knows? Like, nobody knows. But I think that between NVIDIA here trading at 131, I don't know how much of a reaction we're going to have. The market's anticipating. I've calculated about a 10% expected move on NVIDIA. That's roughly average for earnings over like a 10 to 14 day window. So that puts us up into the 140, maybe the 144 zone, 145 zone, or that puts us down into the 115, 16 zone. If we get any follow through. I think there's so much anticipation around this. We could also see that price doesn't necessarily go as far as people want, and maybe that makes it even trickier. So I don't know. It's an up, down, sideways. We'll figure it out. It's nice to see some green in the portfolio, despite a little paper cut that I took this morning with a directional push. So it's been an interesting last couple of days with some of the day trading that I do in SPX. Typically, we see a lot of indecision, and it's easy to carve out a little bit of profit in the morning. But we've had direction. Even this morning, direction. That's 5 days in a row, which is very unusual. It is what it is. But I grew a little frustrated today with just seeing price just not even like a calm, chill open. It's like the market just wants to churn and grind and drift, and me no likey. So still got one position on. Let's see what happens. I need this thing to recenter a little bit towards like 59.90, 59.85. And I'll grab a little winner there. So we'll figure it out. But P&L on the day is good. I did end up taking some profits off the table with a couple of trades. My Japanese yen futures trade. This is /6J. So I took profit yesterday on this trade. I was up $450. It's just shy of the max risk. So I was risking $687. This trade was out to September. I said this when I took this trade in the very beginning. I like the trade, but I don't love that I could only go out to September. And so I've seen a very quick run in profit. And I've got $450. My max profit's around $1,200. But in order to get that max profit, I need price to be greater than this level and also above that level by September. I have no idea what the Japanese yen is going to do, right? So I'd almost rather reestablish another position, see if I can get more time in the futures contracts, and maybe this is setting up some type of bullish pattern here. And then maybe I can trade another leg of it. But meanwhile, I will be watching FXY. If we still have additional strength and flows in the Japanese yen, then FXY are shares that I own. That way I take the time element out of it. So I'm still going to keep that on as a hedge. I still have a bunch of hedges with the futures market. So this kind of short position here. I'm trading a bear put debit spread. So I shorted at the top, and I'm looking at basically incorporating this entire move. So from this long put to this short put, that is a debit of it cost me about $500, but the max profit is around $2,300. So there's pretty good reward to risk. What do I have to see happen? Obviously, I need to see price continue to fall. It is mainly serving the purpose of it's like a 0.25% risk to my account, and it pays, maybe max of 2%, 2.5% profit, which is fine. But I want to see where it goes. If price goes back up, okay, fine. If we start to see price falling towards the 200 moving average, that is also fine. It's a little bit harder and more unpleasant to see price falling lower, but that's why my hedges are here. So ES is hedging, MES is hedging. I've got some income trades in as well on a lot of instruments. So XSP is one of them, which is like your mini version of the SPX. And I've got a little profit trap down in here. So yeah, I'm positioned for, I've got 9 trades running where if price goes up, I make money. Price goes sideways, I make money. Price goes down, I make money. Price goes down a little bit more, I've got a profit trap in here. That's my perfect spot. But we'll see. So I'm just trying to set it up and figure out what to do next. Mag 7 wise, things responded a little bit nicely. Like Amazon had a nice rip off that 144 moving average. Apple yesterday, not Apple. Let's see, Costco had a nice little run. So I've got a profit trap running for Friday on Costco. This is a broken wing butterfly. Actually, it's not. It's a technically, I guess I call it a call condor. So I have a profit trap up here. I pulled in $1 credit on Costco, and then I have a profit trap that looks like that, and then I've got my risk. So I could max this thing out at about $6, and my risk is I think it's with the $6 it'd be like $1,300. So that's my max risk. Highest probability is I just walk away with $1. That's probably the likely scenario. If price wants to come back up and try to revisit these highs, I've got a little bit of wiggle room right there. So these are, I mean, essentially I took a trade in that allows me to grab some profit and call the top, which I don't love to do, but I thought this was due for some type of reality check, and it's getting one. So that looks good for Friday. And also on Meta, same thing. So broken wing butterfly up here for a small win. It's like 50 cents credit, but a $5 profit trap in case we come back up towards the highs. So I'll just be watching those levels. I already took profit on Netflix. That was a winner from last week. I did have the expiration out to this week on Friday, but I just took it off last week. I had a $1.10 credit, closed it out for a 10-cent, or $1.15 credit, closed it out for like a 10-cent debit. So took a bigger win there. All right, Tesla 295, still sliding. Tesla is a couple of things. Tesla, a couple of dollar cost average levels. So my next one's going to be 285. I mean, I might consider rolling that down a little bit, but these are small allocations. I mean, this is $1,000 or $1,100. That's $1,500. That puts my position a little bit more towards like the 300 zone. And if we see Tesla get up towards highs again, like that's a good return. It's a small allocation, so I'll just kind of be patient on it. More important would be this was full profit last week, so that 221 expiration was $228 per contract, and then for March, this is a 255. So I've still got some wiggle room here. I mean, 295 we could certainly test, but 255. Let me check the options chain here. Okay, now we're seeing some price come back to red. Yep, son of a biscuit. Went right to that freaking expected move. All right, one trade's running. I'm gonna let that thing keep going. Okay, Tesla. Let me check the options chain here. So going out to March 21st on the low end options chain, we could get down to like okay, so expected move gets us down to about 260 to 255. That would be my assignment level. If I was taking assignment, we'd have to have Tesla continue to sell off directionally. So probability wise, we have to have more than one standard deviation of all directional downside move. Could it happen? Sure. But this trade's profitable already. That expired last week. This trade is currently running. So if I get assigned, I would have the assignment 255 would be my assignment, and 5 and 217. So I'd own the shares at 247. I think I could hopefully do some work and repair that. So that's Tesla. Berkshire, just going to stay out of that one. Bonds, pausing on the day. 10-year yields, little green candle. Let's go top down here. SPX. Is Nvidia going to save the market? Is there more pain to the downside? This 144 200 moving average, I'm still watching these levels. This yellow box is where I would like to be deploying long positions. Okay, so I'm not saying I'm wishing for the market to drop, because the way that it feels is always terrible. You know, having 1, 2, 3, 4 days of selling doesn't feel very good. You know, so if this is a high, low, lower, high, lower, low, I mean, if we don't take out these lows, like, we're still going to deal with all this chop. There's still a lot of potential chopping in here. That could be what the market's going to give us. You know, doesn't really go higher, doesn't really go lower. These would be the guardrails I've talked about for the last few weeks. You know, nothing's breaking. Bond market's not breaking. Equities market's not breaking, despite all the wild and crazy stuff going on. But if it does break to the downside, you know, I think it's going to feel like crap, but I also think there's an elasticity where the market will snap back. So I just want to see if we can get a balanced trade here. Okay. Let's go with, I'm going to take a look at something really quickly this morning. This trade is my call spread. Put spreads and mostly profit, 59.50. All right, let's flip this around. Actually, it'd be a put spread. 59.50. I get anything for that today? So if I pin this thing at today's low, 20 cents credit on the trade. From the open, 56, that's up 40, 50 points. It's not really a great trade. I'm just debating. I've got a trade in that's running right here. 325 trading for 430. I need a little bit more time. I'm looking to see if I can get price to maybe recenter back at today's open. So I think I'm going to do something like this. 59.50. This isn't bad. 10 delta, 45 cents. I think I'm going to take this trade. And as we came back to today's lows, I can trap this thing. Could I go one strike lower? Okay, about 40 to 45 cents credit. See if I can get 50 cents on this thing. So pending order on this trade at 51 cents. Come on, give me the midfill. 60 cents. All right, I'll try 45. Come on. All right, I'm going to do this. I'm going to put this in pending for $1. I'll let that just marinate. I've still got one trade in for the morning. 59.50. Let's see if that gets filled. All right, let's go top down. So SPX back here. NVIDIA today is going to be probably a 1+% mover in the indexes. SPY, QQQ, market cap weighted. You're probably going to see about a 1% move on NVIDIA, or a 1% move from the indexes or ETFs because they're market cap weighted because of NVIDIA's influence. There's more influence on NVIDIA's earnings than there was on CPI and there is on FOMC. Like, this is probably the most, like, single-handedly the biggest mover of the year so far. And nobody knows what's going to happen. I do think that earnings will probably be fine. I mean, it's hard for NVIDIA to miss earnings, but it's a matter of, are investors taking their positive earnings as optimism in the future? Is there any type of concern that NVIDIA expresses? Is their guidance a little bit, I don't know. Is it wishy-washy? Nobody knows. So we'll figure it out. But I've got, like I said, I've got a lot of income trades in that are just building up some positions with, I've got a buffer. If price goes higher, life is easy. Price goes lower, I'm braced for that. I'm hedged. And I think that's the reality. It's like, I'm just pretty much going to be like, let's see what earnings gives us. Let's see what price is. And then I'll make the appropriate adjustments and reactions. So hedged on futures for right now. NDX, let me see if I took a trade on NDX last week. If not, let me see what NDX is trading for. 45, and that's good. That's actually pretty good. I should be able to collect a little bit more premium out of this one. Let me take a look. I don't know what the strikes are going to look like, but let's go to March. Maybe in like the 19.6 or 19.5 zone. So let's go out April 17. So all I have is AM expirations for NDX. What is this nonsense? That can't be right. I'll try the 11th. So if I were to buy, it's a 25 wide and 20,000. Okay. No, that's just a terrible trade. Just way too much risk. $4,800 risk. The spreads are just too wide. If I move this down a little bit, I don't think I'm going to be able to take the trade that I want to take for less than like $4,000 or $5,000 risk. So, not going to take that trade. I mean, the Ivy rank is good. I just wish that's why I traded the Qs. I traded QQQ last week. So this one actually has less. This is crazy. The QQQ is a lesser Ivy rank than the SPY right now. So I would rather trade QQQ, which I have. I've got some levels way down here. All right, there's my trade. All right, so 520 by 519 for a profit trap, 455 by 435 for a credit spread, wider credit spread. So I should be able to pull in credit about 53 cents per contract. And then if I get the profit trap, that throws an extra buck my way. So $1.53 be my max in that little income trade. Anyway, so just like bracing for potentially some downside. We'll see what everything does. All right. Next up, Russell. Let's talk Russell and Dow. Let's go to SPX here. Keep an eye on that. Let's go Russell and Dow. Dow 437. I still think Russell and Dow, I like Russell less. I like Dow more. I don't know if the Dow is going to be catching a bid, and trying to make some higher highs, maybe reduce the volatility. But part of me wants to look at this. I don't know what the IV is. Let's find out. I might look at an income trade if it's decent. Dow. If I went out to the April 17, that's 50 days out. Look at my levels below, let's say 416, 415. So if I buy, put in a profit trap, 415. That's not bad. Potentially extend this line out. Extend right. There we go. For 15. It's not a bad income trade. Question is, do I like it enough? Probably on my portfolio margin accounts, I wouldn't mind like this 405. So I've got a profit trap, pull in still $1.40. It's cheaper than the SPYs, cheaper than the Qs. I think it's less volatility. If I had any ownership, that would be ownership of 405 minus the $1.40 minus the dollar profit trap. So that would be a 405 minus 1 minus $1.40. 402.60 be my ownership. That puts me down about a 10 delta, which shows me probability wise we're 90% chance this thing finishes out of the money, which means unlikely getting assignment. But I would tie up some capital. I like the Dow enough. It would just be kind of serving as like a glorified cash secured put. Don't mind the trade. Not a bad trade. I think I'm going to take this on my portfolio margin accounts. So you can see I get $1.40. $1.40 not filling. $1.39. Well, heck. $1.38 just got filled. Okay, and this one. And this one. All right, added that in. So that is basically a naked, it's a cash secured put, not a naked put, cash secured put with a little profit trap. So this is DIA. April 17 expiration. Buy the 437 put, sell the 436 put, sell the 405 put, $1.37 credit. And I'm willing to own it. That put my break even at 402.60. If I took on any shares. Unlikely to get assigned, but that's the trade. Okay, I'll get that posted in the Pulver Alert section. So I like the Dow more so than the Russell. 405, that's fine if I take any assignment. This one is done. If we go to higher highs, easy peasy. That's just $1.37 that becomes, income. Russell, probably good on the volatility side, but I just think small caps, unless we get like a heavy amount of rate cutting by the Fed, I don't think we're going to get a bunch of awesome direction on the Russell. So I think Russell growth. This one has a pretty impressive bar count. I don't know. I hate to say I'm going to wait for another 200 moving average to get hit, but that's probably what I'm going to wait for. I'll wait. IWX. I should have just bought this thing off the low. But anyway, I'll wait. I want to see if I get something better. I like the value play. I like this pullback towards the 200 moving average on Russell. This is IWY. Probably just a dollar cost average position there. VIX is down slightly. Dollar index slowly sliding into the 106, 105.50 zone or 106.44. If the dollar is going to catch a bid, I do think this is the area that the dollar may be done selling off. It would be nice if the dollar goes lower. That's great, but there's some pretty good support on the daily time frame right at this 200 moving average. So if we pull back into that 200 moving average and we break the structure or we start to bottom out, I would not be surprised to see the dollar range. Doesn't mean that the dollar's got to go crazy up, but I think a dollar range, at least finding some interim support. Previous highs here that can offer some dynamic support. Okay, oil. I am glad I'm staying out of oil. It was initially I took that iron condor trade, and it is not staying centered. So I'm glad that I'm out of it. I don't know if we're going to get a chance to see oil support here around that $66, $67 zone. And if that's the case, I'll probably just take another debit spread on crude oil futures. So if we're in this price point, then I probably go 30, 40 days out, see what that looks like. Let me take a glance at one instrument here. I want to see if we are due for an expansion on gold or on oil. Let's go here. Yeah, I mean, oil's trying to make a move. So lots of support, starting to build up it with some volatility. That did it for quite a while as well. There just seems to be like a lot of coiling in oil. So yeah, I think a little bounce there would be probably my next trade. It would just be defined risk. I mean, nobody knows if oil is going to be steady and stable at this $66 handle or if it just gets a little nastier. This support level's held basically since 2022. So I don't know. It's tough. If it holds and it's a nice floor to trade from, then I wouldn't mind going long oil. But probably just with defined risk options. Natural gas, I'm still long UNG. Gold has had one decent red day. That's it. Gold is still pretty strongly bid. I'd like to see a pullback. I want a pullback before I add any more positions. If I get the pullback to previous all-time highs, pull back in some of my dynamic moving averages, then I'll probably add in some GLD and GC exposure. Until then, I'm just staying out for right now. Silver, a little bit of a pullback, which is fine. 29 support, 26 support. Looking to see if we keep grinding higher towards 36. Bitcoin hitting the 200 moving average on the daily time frame. Look, it's pretty simple. If Bitcoin is back above 91,000, that's probably a good sign for the bulls. If we slide lower, we have a break, retest, and a slide lower. This previous resistance would be my next support zone. So you're going to have to see if the Bitcoin bulls are going to step up. If so, where? But either they get back above 91K or we bounce back around 75,000. Looks like my feed is here. All right, just setting a chart alarm. Okay, move this out of the way. Okay, that's my Bitcoin look. MicroStrategy at 255. I did close out a put yesterday. I added a new collar in, but I've got the collar now in 310 by low 200s. My break even is 263. I'm still looking at covered call at 310. And just in case if Bitcoin does bounce and MicroStrategy goes with it, then getting back to 305, 310 is fine. My covered call that still exists into May is looking pretty good. I have that one MicroStrategy. So my covered call at 310 it's paid out about $3,900 right now, about 64% of the way there. I'm just gonna let it keep decaying. That's all we need. But I don't want to sit there and chase it, like a fool. I mean, I obviously want to see a bounce, and I measured this one out. So high, low, lower, high, lower, low. We did hit symmetry. We're hitting the 200 moving average. There's previous resistance here that could also offer some support. We also fell pretty inefficiently the last 3 candles. So, again, Bitcoin's going to have to be the proxy. It's going to have to go up. Bitcoin goes up, MicroStrategy probably goes with it. I'm sure the whole time this has been falling, Michael Saylor's like, let's buy more Bitcoin. So it's not like they don't have it on the balance sheet, but they are pretty much tied to if Bitcoin goes up, MicroStrategy looks good. Bitcoin goes down, who knows? This one, I might end up taking some assignment of Coinbase, which also makes things really interesting. I'm not interested in really owning it, but if I did, it would be around like $180, $88. If I owned it here, it'd be something around $145, $146. So 188.93 break even, 147. Again, probability of this trade still pretty low. We've had a pretty aggressive sell-off. Again, just following suit with Bitcoin. Ethereum, also not performing well, haven't broken the trend line. I wouldn't touch Ethereum until we get on the right-hand side of this. Copper, a lot of volatility on copper. Let me check and see how that trade's doing, actually. So /HG. Right now, copper is about break even on my trade. This is a 111. Is with it? I guess it's a spread, so it's a 1111. But if I win on this trade, it's an income trade for $160, and I need some more time. This is only out to April. It's not that big of a deal, but let's give it a chance. Okay, actually, copper's up about, yeah, it's up a little bit. It's positive, but barely. So net, it should be worth about $1,000. It just has to stay above 418. 4.18 is the line in the sand for me. Japanese yen, like I said, I closed this one out for profit. I will reestablish. I don't know if the contracts have changed at all. Japanese yen, I can still go to September, so they haven't changed. If I get contracts on Japanese yen futures that go out to December or into even Q1 of next year, then I would also consider trading another Japanese yen. It to me, it's like a hedge trade. It's I don't know. I think the Japanese yen has had lots of manipulation. It might be the one central bank that's still going to be raising rates, and it certainly tends to be a risk-off currency when things get a little gnarly. So, but I want to trade further out than just September. What else we have here? DAX, just like that. DAX is right back up towards the highs again. Crazy. I don't know what to really do with this other than I mean, I'm kind of hoping we have a dip or a pullback. I just don't know if we're going to get it. This might just be a bull flag, which seems insanely aggressive. That I don't know if I can buy that. So I do have position in an FEZ. I took in some puts on this one. So FEZ. FEZ is 49 put, 48 put, 47 put. I just put in some cash secured puts, cheap price, out of the way. I ended up pulling about $3 of income out of that, and just need some time. Those trades are out for, that was a leap actually. And that's it for right now. But I mean, if this is going to be one of the best performing indexes, like, I mean, money seems to be finding it. Money seems to be finding China. Money seems to be finding Europe right now, and that's probably good since the U.S. is still kind of sideways and choppy, and nobody knows what we're going to get out of the U.S. this year. It's been a great run since 2022, a bottom in 2022, but I think it's kind of topped out a little bit. UK also fighting back a little bit in a big way. Nice. Argentina sideways, super choppy. Could I don't know. This is a interesting play, but ARGT. Could I do a strangle on this thing? March 30 or March 21st out 23 days. Let me see if I could set up $90. No, premiums are just terrible. I was going to look at like a strangle trade. If I did like a 91 or 92, but that only offers like 20 to 30 cents credit. So that's a horrible trade. Never mind. I'll just wait. China up to some fresh highs. Hooray. That probably means that my JD stock is doing fine. JD at 43, earnings this next week. All right, let me take a look at this. I might roll this. Look at JD really quickly. So I have a covered call at 39 that gets called away this week for profit. If I roll it out through earnings next week, probability of JD getting below $39, probably pretty slim. If we have a positive earnings print on it as well, man, I think I'm gonna try to roll it maybe a week. Let's see. So JD here, I have the shares covered at 40. I did roll it. Well, I guess I'm taking on the risk, huh? It's still in profit. Gets called away for, $4 or $5 a share. It's fine. Well, I guess I'm going to deal with earnings. Thought I was still debating that. This one, yep. So rolled it to March, taking on the earnings. That's fine. This account here, shares rolled. Okay. So never mind. That back and forth, I ended up rolling it. Good. So that updates JD. 35.92 is my break even. 35.92 break even. 3/21 expiration. $40 cover call. So I own the shares, and yes, I'm sacrificing some upside, but I'll take the $4.08 of profit on 1,500 shares. That's a pretty good chunk of profit. So 408. So $6,000 into March, as long as we stay above $40. Not bad. I like these two stocks as well, SEHD, SEHG. Honestly, favoring SEHD for dividends over growth right now, just in case there's an exit. And that's, if it feels a little bit like the top in 2021 or rolling into 2022, if the market's going to move away from growth and momentum and go into more defensives, go into lower beta, momentum stocks is not where I want to be. I want to reduce as much volatility as I can, still generate the income. But I do not want to have like a bunch of stock picking drama if, Palantir's down 30, 40%, MicroStrategy's down 40, 50%, Carvana's up. It's like all those big turns we've seen the last like 20 to 30 days. I don't want to deal with all that crazy volatility. So anyway, I think SCHD is a good play for 2025. It's also dirt cheap. There was a split in this one. So there's a 3-for-1 split, and you got a solid dividend at 3.5%. Not too bad, plus the price appreciation. This is kind of like an inexpensive way of trading the Dow, in a way. It's not the Dow, but it is a decent basket that's also pretty inexpensive. So a nice alternative to playing the ETF DIA. Okay, any questions, any thoughts, we want to talk currencies. Dollar was up, pound is up, Japanese yen volatile, Asia currencies. So Japanese yen down a little bit, Australia, New Zealand down a little bit. Take a look at my Swiss pairs right off that 200 moving average. Well, I guess the time to wait continues. Still holding some carry. CAD Swiss still holding some carry. Probably loading back up into here, maybe loaded into the flash crash. Just going to be patient. Got to be patient. Euro Swiss better, but same thing, just not really getting much follow through. Pound is okay. Pound's looking a little bit more resilient. See if we can break some recent highs. Kiwi Swiss also revisiting maybe equal lows here. A couple levels. Do we hit the lows? Do we hit the lows? Keep an eye on it. Dollar Swiss. I wouldn't mind reloading here. If we come back down to maybe like the 786, 86, 100% zone, if we pull back that far, I would probably load back up on dollar Swiss longs. I like that trade actually. Otherwise, I'll stay out of it. I think this is just a large range. So we're coming all the way back down here. If so, I'm going to scoop up buy trades and then take them back up towards 92. So I'll watch that one. Aussie CAD, still long on this one. New Zealand CAD, I'm still long on this one. Euro CAD, all sorts of chop. Pound CAD, a lot of volatility there. These, I mean, pound crosses are nuts, man. It's like straight up, straight down, straight up. That is not a fun environment to trade. If you're scalping, maybe, but it's not my style. So not sure if everyone's enjoying the yen crosses or not enjoying them. I don't love them personally. But pound dollar, if we keep resistance here and roll over this trend line, that's all going to be like dollar index related. So euro dollar, pound dollar, watching the dollar index pretty closely. Euro dollar back to 105. If we're going to have a shorting opportunity on euro dollar, this is probably a good spot to look for it. If we break this trend line, see this 106 handle act as resistance, then maybe a short stop loss and then revisit the lows, get some asymmetry. Maybe this discussion of going to parity again is a possibility, but the dollar index would have to be looking good. Dollar index would have to go way higher for this thing to be heading towards parity. All right, I need to take a quick peek at my SPX trade because it's probably not looking good. Son of a biscuit, man. All right, I got to watch this one. If this gets to 650, I got to close it. Okay, I'll keep an eye on it. Euro Aussie. I think this is range bound. So, I mean, there's an intermediate range in here. I would prefer to look at a sell opportunity all the way up towards like this 1.7 handle. But this looks like a bullish play to me. So if this is a big flag, I mean, support was at 164. We could be hitting, checkpoint one at 167 or so. If it goes higher, then take it up towards a 169, 170 handle. It looks a bit more bullish to me just because of this support. But we're right in the middle. This is my least favorite way to trade currencies, is right in the middle. It's like this is a fight, back and forth. So I don't love it. Euro New Zealand. There could be some resistance here, but man, this looks like it could be breaking out. We had a lot of lows down here. This market's making higher lows right now. So if there's a breakout here, we could be breaching new highs, stop loss below, maybe seeing a breakout trend. But those are tough trades. Like pound Aussie, pound New Zealand, they're quite volatile. I mean, the daily time frame, the structure's held really nicely. Higher lows for quite a while. Higher lows, higher highs. So is it channel, and then we have retracement, but that could be the trade. Pound New Zealand's same thing. 200 moving average on the daily seems pretty supported. But yeah, I'm pretty light in currencies right now. It's mostly just Swiss pairs that I'm in, and I'll still just level into them. Aussie CAD I'm long. Aussie New Zealand I'm still long here as well. Nothing crazy. Aussie CAD long, New Zealand CAD long, Aussie Swiss, CAD Swiss. Closed out my Swiss yen. Yep, closed out Swiss yen near symmetry. That was fine. That's about it. So, look, here's the deal. Tomorrow earnings, or today after market earnings. Nvidia is what all eyes will be watching. This has the ability to influence the S&P, influence the Nasdaq, influence anything semiconductors. Okay, it has some weight in this as well, but it's mostly SMH. So it's a big spot here, SMH sitting right at the 200 moving average. it's either we hold this level and Nvidia earnings helps this thing pop right back up and it renews the optimism in AI, or if it pushes lower, we're going high, low, lower, high, lower, low. I wouldn't mind scooping up some SMH later, but if we are going to dump momentum stocks, do not try to catch those bottoms. In fact, if anything, I'm probably going away from momentum stocks, away from growth stocks, and going a little bit more defensives and lower volatility. I do not want to be a stock picker when things can be dropping 40, 50, 60+%, because that 40, 50, 60% could become 80, 90%, right? You could turn it into a Trump US dollar. Where's the Trump US dollar spot? Is this it? There you go. There's your 90% pullback, or looking at like a Palantir. I mean, what was the best performing stock of 2024 is now down 30% in the last like 4 days. It's crazy, like the last week or so. So just gets a little gnarly out there. Don't be a bull market genius. Aussie dollar, New Zealand dollar. New Zealand dollar, I'm still long. I'm still holding New Zealand dollar. Aussie dollar, I closed. Yep, I closed out Aussie dollar for a win. I had 2 winners, 1 break even. I got out of that trade. So I'm done with this one. I'm still looking to buy Aussie dollar at 60.20. New Zealand dollar, I'm hanging in there a little bit longer. A little bit longer. Yep, but dollar CAD I closed, dollar Swiss I closed, Swiss yen I closed. I'm still holding a lot of the other Swiss crosses. Okay. All right, that'll do it for me today. Enjoy the rest of your day. Nvidia earnings after market. Let's see what happens. We'll talk through it mañana. All right, thanks everybody. Have a good day. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.